class on partnership final accounts. That is your first chapter of the textbook. And firstly, before starting off with the numerical portion, I would like to tell you something about the final accounts. Final accounts comprises of three things. First is preparation of trading and profit and loss account, capital accounts and balance sheet. How you will prepare trading and profit and loss account? Trading and profit and loss account will be prepared on the basis of trial balance that is given to you in every question, right? Trial balance is given to you in every question. On the basis of that, you will prepare trading and profit and loss account. Actually, the performer is like particulars, and this is a rough calculation column. This is the final for the debit side, particulars, debit and credit, right? So this is, first you will prepare the trading account. All the expenses related to the production will come in the trading account. That is, all the direct expenses and the direct incomes will come in the profit and loss account, and you will then trading account, and whatever loss or profit you earn through the trading account is known as gross profit. Then gross profit is or gross loss. Whatever you get, gross profit or gross loss, is transferred, and with the help of that and the other indirect expenses and income, you will be preparing your profit and loss account, right? Then the partners' capital accounts, that is what they have earned, what is their personal income, what is the personal expense they made, and finally the balance sheet, which will have all the liabilities and all the assets. So let us start off. We will do the numericals, and by doing the numericals you will know which all items are to be included in the trading account and which are to be included in the profit and loss account, right? So we will start off with the numericals. Let's move on to the first numerical, have been given the trial balance, and you have Messrs. Suyash and Siddesh. The trial balance have been given in the books of Suyash and Siddesh. So we will write in the books of Suyash and Siddesh. After this, in the books of Suyash and Siddesh, trading and profit and loss account as on year ending 31st March 2009. So this is how you will prepare your profit and loss account. Let's start off with the adjustments as well as the trial balance. Whichever adjustments are given to you, you just mark it in your trial balance. Suppose first is your closing stock given to you, next is your, see, where whatever adjustments are given, they will appear twice. That is balance sheet or trading account or profit and loss account, and balance sheet is a must. So you have, suppose you see the second adjustment that says outstanding expenses for salaries. So what you do, you find salaries. Salaries is given in the debit balance. Fourth item, you just put a tick mark. So when you prepare the accounts, you will remember that there is an adjustment, and you will do that adjustment in the rough column, and final figure you will write in the final column, right? So we will first start off with the accounts. Opening stock. Opening stock will always come on the debit side of the P&L account. So, and it will come in the trading account. Opening stock is given as 30,000, right? Next is purchases. Purchases again will come on the debit side. To purchases. Purchases is given as 75,000. Right? What is next? Next is wages, 12,000. Wages is given 12,000. Wages comes on in the trading account, and salaries, they come in the profit and loss account, because they say that wages is directly given to the people who are engaged in the production activities, whereas salary is given to the white collar people who are indirectly attached to the production activity. So wages is always recorded in the trading account. So to wages, there is no adjustment. Write it directly. How much? 12,000. Next item will be salaries. That will not come here, that will come in the profit and loss account. Next is carriage inward given to you. Carriage inward will come in the trading account, and outward will come in the profit and loss account. So it will be to carriage inward. You know, inward is related to purchases. So it will come directly affecting their production activity, that will come in the trading account. Whereas carriage outward will come in the profit and loss account because it is related to the sales. So that is an indirect activity. Carriage inward is given as 1000. So we will mention 1000 here. Next is carriage outward. Printing charges, rent paid, bad debts, postage, machinery, furniture, debtors, cash in hand, bills payable, creditors. Sales is given on the credit side, that will come. That is directly related because if there is sales only when production takes place. So how much is the sales? Sales is 1 lakh. So you have mentioned sales 1 lakh. Any other item? See, in the please make sure you write the closing stock also. In the adjustment, provide depreciation, that will not come. It will come in the P&L account. Bad debts will come in the P&L account. Goods costing 4,000 distributed as free samples. Goods mean something related to production. When you have produced the goods, either they are sold or they are destroyed or they are left as the stock which is unsold, that is known as the closing stock. Sometimes whatever goods are produced, they might be given as free samples or distributed as free samples just for the promotion basis. So even that will come on the credit side because it is like sales. Though you are not getting the money, but definitely the goods account is going down. So here goods account is increasing, so we are debiting. Here it is decreasing, so we are crediting it. So by goods, you know what, distributed as free samples, right? How much it's for? 4,000. So mention 4,000. Next is you have any other item, goods costing, then nothing. Closing stock is given. Closing stock valued at market price, it is 60,000, whereas the cost price is 50,000. So we will always take it on the cost price. So it will be by closing stock, how much? 50,000. Right? So you have 1 lakh, 4,000 and 50,000, that is 1 lakh 54,000. And here you have 30,000, 75,000, 12,000 and 1,000. So here 1 lakh 54,000 and you subtract this side, so you will get a gross profit. Gross profit carried down. How much is the gross profit? 36,000. And this will be 1 lakh 54,000. Right? Close it out. 1 lakh 54,000. And this will be 1 lakh 54,000. Right? Now you come on this side. You have by gross profit brought down. Now this account is closed. This is trading account. This is trading and P&L account. So trading account is closed, right? You have got the gross profit. Gross profit will be carried out. Now this is the procedure of making what? P&L account. So gross profit is 36,000. Mention 36,000, right? Come on to the debit side and see the expenses. Opening stock will not come. Purchases we have taken, wages we have taken, salary is 7,000 and there is an adjustment as outstanding salary is 1,000. So you mention 2 salaries, right, plus outstanding. So how much is the salary for? 7,000. And what is the outstanding salary given in the adjustment? 1,000. So what is the total you get? 8,000, right? 7,000 and 1,000, 8,000. This 1,000 will come twice, as I said. One in the profit and loss account you got, another you will mention on the liability side of the because this salary is yet to be given. So you will also mention in the on the liability side of your balance sheet. Just remember. Next is carriage outward given to you. Please mention carriage outward. Is there any other related to it? Any other adjustment related to it? No. Carriage outward is 2,000. We will write directly carriage outward 2,000. To carriage outward 2,000. Next is you have printing charges. How much is the printing charges for? 1,500. To printing charges 1500, right? What is next? Next you have the rent paid. Is there any adjustment in the rent paid? Rent paid is how much? Is 1700. There is no adjustment. Write it directly to rent 1700, right? What is next? Next is bad debts given to you as 3000, right? Bad debts given to you, so we will adjust that. It is known as reserve for bad and doubtful debts account, right? RBDD, reserve for bad and doubtful debts account. First is bad debts given to you in the question. How much is the bad debts given to you in the question? 3000. Bad debts is given to you as 3000, and in the question also they say provide for further bad debts 2000. So what this will be new bad debts. Already you have 3000 and now you have new. So write new bad debts. Whatever you have, something new you added, and whatever is the old one you subtracted. So 3000 plus 2000, how much you get as? 5000. So this is done, right? Bad debts is done. Now what you can say, you have something old? No. So old reserve or something? No. It's like further bad debts they are giving. So that bad debts is done. Next, what are they are going to provide? Depreciation on machinery 10% and furniture 15%. So no dates have been given, so we assume it is for the whole year. So depreciation, machinery and furniture. How much is the machinery for? Just see the value in the trial balance. It is 30,000 and 10% will be how much? 3,000. Right? Next is furniture, 15% you have to provide. So furniture is how much? 15,000 you have to provide for 15%. So it will be 2250. 2250. So it will be 5250 total depreciation. Right? Next, what you have, is there any other thing that we are leaving? The bad debts you done, outstanding you done. Telephone bill we have not mentioned, I guess. Postage and telephone they have said. Postage and telephone 1000, what they have said, we have not mentioned that. So to postage and telephone, how much they say it's given in the question? In the question they have given postage and telephone for 1000, right? And you have plus outstanding also given. Outstanding is given as rupees 500. So 1000 plus 500 will give you 1500 or 1500. Now anything is still left. So you have 1, 2, 3, 4, 5, 6, 7. 7 items that's being given to you. You have a figure of 8000. Then you have 2000. Then you have 1500. Twice that's being given to you. Then you have one more thing that you have been given is the advertisement that is being given for the free samples of goods. So goods given as free samples. Either you write it here, distributors for free samples, and this will also come here also, right? So you write here also, it will also come on this side. So to goods given as samples. So that is for how much? 4000. Right? Now you have 4000, then you have 2000 and 5000 and 5250. That's all. Now you have a gross profit of 36,000 and you add up, you will get, and whatever you get, you subtract by these numbers, that is 36,000 minus 8,000, 2,000, 1500, 1700, 1500, 5250, 1500 and 4000. Then you will get a balance of 7050. You will get a balance of 7050. 7050 will be the balance. Now what you will do with this balance, you will divide it in the ratio that's been given. Nothing is given means equally. So divide between the two partners, that is Suyash and Sidesh. So to Suyash's capital account and to Sudesh's capital account, right? 7050 divided by 2 will give you 3525. 3525. 3525, right? So this is 7050. Equalize it and close it. 36,000 for this side and this side also. 36,000. So you have prepared the P&L account. This is the gross profit you have calculated. This is supposed to be the trading account. Here you have prepared the P&L account. This is actually the net profit, right? This is actually the net profit that will be added to the capital account when you prepare the balance sheet. If you have the net loss, that will be subtracted. You don't have to do anything with the gross profit, that is already being included. So net profit is 7050 divided between the two partners equally with the figure of 3525. Let's make now partners capital account and balance sheet. See, next thing we have to prepare is you are preparing the capital accounts of the two partners, Suyash and Siddesh, right? Suyash and Siddesh, right? So what will come here? First of all, you will have by balance brought down. What is the balance brought down? Balance brought down on of the capital account. See, in your questions, credit side capitals, they have been given of 50 and 40,000. So you have to write that balance, 50,000 and 40,000. So this is that balance. Now whatever, this is 50,000. Now whatever will increase this 50,000 right here, whatever will decrease their capital, you have to write on the debit side. So they have earned profit. So we will write here by P&L account. How much profit did they earn from profit and loss account? 3525 each. 3525 for Sudesh and 3525 for Siddesh. Next, come on to this side. What you have? They have the drawings also on the debit side. Drawings is given as the last item. 2,000 and 1,500 for Suyash and Siddesh respectively. So you have two drawings, right? How much is the drawings for? 2,000 and 1,500. 2,000 for Suyash and 1,500 for Siddesh. Next, what they have been given? Nothing. They have just have to calculate the balance. No else will, nothing will come. So you will have to balance carried down, close it, add it up. This will be what? 53,525 and 43,525. 53,525 you will subtract by 2,000. How much you get? 51,525. 51,525. 53,525. 43,525 minus 1,500 will give you 42,025. And this will be 43,525. Right? So these are the balances that you have got. Now these balances we will use in the balance sheet. Let's prepare the balance sheet. Let's prepare the balance sheet now. Balance sheet, what all will come? All the assets will come on this side, and you will have all the liabilities on the on my left side and assets on this right side. So what will be the items that will be coming? First you will have, see on the in the trial balance, opening stock, purchases, wages, salary, carriage inward, carriage outward, printing charges, rent paid, bad debts, postage. You have machinery. Machinery you have for 30,000. Machinery you have for 30,000. You have provided depreciation also on it. How much depreciation did you give? 10% depreciation. 3,000 for 12 months. So this will be 27,000. Right? You will subtract the depreciation. Next, what you have? You have the furniture. Furniture is how much? 15,000. You have furniture of 15,000. Right? You have provided depreciation for 15%. 15% you just 2250. 15,000 minus 2250 will give you 12,750. This minus this will give you 12,750. 750, right? Next, what they have given? Motor car. Is there any adjustment? No. So you just write motor car 20,000. You have motor car, there is no depreciation, nothing. Directly you write the figure in the final column. Motor car 20,000. Any other item? Yes, they have given sundry debtors. Sundry debtors are given for 25,000. Sundry debtors are given for 25,000. right? And what else? We have to provide for further bad debts. See in the adjustment number 4, provide for further bad debts 2000. So you have to subtract the new bad debts. In the profit and loss account, you add the new items and subtract the old ones regarding the debtors. But in this sundry debtors you will subtract, because from 25,000 they say 2,000 more have gone bad, means you will receive 22,000 less now. So this will be new bad debts. How much? 2,000. So 25,000 minus 2,000 will give you how much? 23,000. Right? What else? Closing stock. Closing stock you will take. How much is the closing stock given to you? Closing stock is at the cost price and market price, so you will take it at the cost price. Closing stock 50,000. Right? What next you have? You have cash in hand. Cash in hand is left. That will be come on the asset side. This is cash in hand. How much? 9,000. That's all. So you have 9,000 as cash in hand as the last item. You come on the credit side. You have the capital of both the partners. You have capital of both the partners, that is Suyash and Siddesh. Suyash's capital is how much? You will not take the capital that is given in the question. You will take the capital that you just calculated. Capital of Suyash is 51,525 and for Siddesh it is 42,025. So this adds up to 93,550. 93,550. What else will come? You will have sundry creditors. See, we have already adjusted the P&L, so we won't take it here. If you don't adjust, we take it here. Creditors, see on the credit side what is being given. Bills payable is being given to you for how much? Bills payable is 9,000. Please mention bills payable. Bills payable is 9,000. Next, what is given to you? You have the sundry creditors of 10,000. Actually, that is written as per the format, but as per the items I am explaining you, next question we will write as per the formats, that this item will come after this item. So, sundry creditors is how much? 10,000. Anything else? You have the outstanding expenses I told you. Mention all the outstanding expenses. What you had? You had telephone bills, salaries and wages. What was the telephone bill for? Telephone bill was for 500. Right? Telephone bill was for 500. Right? What next you had? Salaries you had for 1,000. Salaries you had for 1,000. See, on the credit side you have also been given outstanding wages, so that you will take it only once. So you have outstanding wages written separately. So that is how much? 2,700. 2,700. Right? Just add it up. You have 27,000 plus 12,750 plus 20,000 plus 23,000 plus 50,000 plus 9,000. That will give you 1,41,750. 1,41,750. This side also 93,550 plus 9,000 plus 10,000. Then you have bank loan also they have given in the question. I'm sorry. Bank loan is for 25,000. Mention that also. You have the bank loan as 25,000. Bank loan is missing. Bank loan is 25,000. So 93,550 plus 9,000 plus 10,000 plus 500, 1,000, 2,700 and bank loan 25,000. 1,41,750. So this was the capital account of the partners, and you have prepared the balance sheet. Now we move on to the next numerical. Let's move on to question number 3 now. See what question number 3 says. You have Amit and Shubham and their profit and trial balance is given. So you will write here in the books of Amit and Shubham, trading and P&L account for the year ending 31st March 2010. Then you can prepare the format and do the problem. We'll first make the trading account, see the adjustments, closing stock, interest on partner they have given. So that will also come twice. you will have interest on capital coming in the profit and loss account, and also coming in partners, you can say capital account, or maybe that will be added in capital account, or you take it in the balance sheet. So generally it is added in the capital accounts. Then you have the depreciation, outstanding wages and salaries. So you please mark in that debit balance wages and salaries, just put a tick mark. So you remember there is an adjustment, don't forget. Then goods worth 5,000 destroyed by fire, and insurance company admitted a claim of 3,500. See, you have a goods that's destroyed by fire, right? So what you do is, total destruction is how much? 5,000. So directly it will come in the trading account, the goods lost by fire for 5,000. Now what you do with the other amount, 3,500? So you have got 3,500 as your money. So that is supposed to be an asset, right? You have 5,000 as a goods loss, right? So that will come in the trading account because that is gone directly from the production. You have got 3,500 as the claim, right? So rest 1,500 is a loss. So this is written in the trading account, that is the total loss. 3,500, whatever claim that you have received, will go on the asset side because that's your money. And this 1,500 loss you will write on the debit side of P&L account, right? So this claim and your debit balance. Let's start off with the numerical. First is you have drawings that's being given, then you have the opening stock given to you, opening stock of 61,500. So to opening stock 61,500, right? You're preparing trading and P&L account for the year ending in the books of this. Next you have purchases. Purchases 98,500, no adjustment, write it directly. To purchases 98,500, right? What next? Next you have wages. See, you have outstanding wages also given in the adjustment, so you write wages inside. So how much is the wages given to you? Wages is 17,000, right? Plus outstanding. You add the outstanding, means 1,700,000 you have to give, and outstanding of the past year or whenever 2,000 still are there. So total payment will be how much? 19,000, right? Next what you have? Next you have the workman's salary, that will also come, and you have the factory rent will also come. So to factory rent, how much is the factory rent you are paying? 4,000. Please mention 4,000. Then you have workman's salary. I told you salary comes in the P&L account, but this is workman's salary. Workman means who's the person directly in connection to the production department. So his salary will come here. To workman's salary, how much is workman receiving? Workman is receiving 6,000. So 6,000 salary will come here. We'll move on to the credit side. Credit side, what will come? You have the sales that will come, and you have good loss by fire 5,000 as I told you earlier, and closing stock. So what you have? By sales. How much is the sales for? 1,98,000. Right? How much is the by goods lost? How much in fire? 5,000. Right? Then you have the closing stock. How much is the closing stock for? You have the closing stock for 65,000. Mention 65,000. So you have these items here. 1,98,000 plus 5,000 plus 65,000 will give you 2,68,000. Right? And you have total the cost. So to this plus this, 61,500 plus 9,500 plus 19,000 plus 4,000 and 6,000. Whatever is the total subtracted from 2,68,000, the balance will be 79,000. That will be known as gross profit, right? And you will carry it down to prepare it for the preparation of P&L account. So this is the closure of trading account. You have prepared the trading account and you have got a gross profit of 79,000. So by gross profit brought down how much? 79,000. right? Now start writing the expenses of the profit and loss account. You have first you have the salaries and wages. Salaries and wages of 18,000. With that you have the adjustment of 3,000 as outstanding. To salaries and wages, how much? You have 18,000, right? Plus outstanding, how much you have? 3,000. So total is 21,000, right? What is next? You have rent, you have of 2,000. Please mention rent. There's no adjustment. Write it directly in the final column. 2,000. Next you have the general expenses of 1,200. To general expenses 1,200, right? Next what you have? You have the audit fee of 2,000. To audit fee of 2,000. Audit fee you have for 2,000. Next is what? You have the bank charges as 500. To bank charges 500. What next? Next is you have discount received and allowed. Allowed is an expense, received is will come as an income. Discount received means you have to pay less, so that is like an income. So you write here by discount received. How much you have the discount received? 2,700. You see in the credit side you have 2,700, and you have to discount allowed. How much is the discount that you have allowed? 3,000. Right? What next you have? You have interest on loan. See there they say 15% bank loan is given to you as 60,000. It's taken on 1st January 2010. So January, February, March, 3 months interest you have to calculate. So interest on loan on 60,000 for 15%, because it says it is 15% bank loan. So that will be that 15% means interest rate. 16,000 into 15% for 3 months will give you 2250. So to interest on loan you have 2250, right? What next? Next you have depreciations. Depreciation on plant and machinery 10%, land and building 5%. So plant and machinery it will be 6,000, right? To depreciation you have plant and machinery, right? 6,000, and for your land and building it will be 4,500. Land and building it is 4,500, right? What next? You have loss by fire. How much I told you will come? To loss by fire 1,500, right? What next? Next you have the depreciations you have given, loss by fire. You have the new bad debts. They have said anything on bad debts? Yes. Provide 5% reserve on doubtful debts or sundry debtors. Sundry debtors amount to 42,000. 42,000 you have to provide 5%. So you write to reserve for bad and doubtful debt account. You have 42,000 for half rate, that will be your 1,500. See, you have 5% on debtors, that is 42,000. So that will come out to be 2,100. So this will this 2,100. Now you have the interest on loan also. Interest on loan, I told you both the partners will have A and S, Amit and Shubham. Amit and Shubham. See, you have interest on capital. How much is the capital? 60,000 and 40,000, right? You have to provide interest on capital at the rate of 10%. So it is 60,000 and 40,000, which will make up to what? 6,000 and 4,000. That means it will be 10,000. Right? Now that's all. You have written everything. So 79,000 plus 2,700, that will give you 81,700. Now 81,700 minus 21,000, 2,000, 1,200, 2,500, 3,000, 2,500. You have all these figures that will come out to be, add up 6,000, 4,500. This will give you 10,500. Then you have 1,500. You have 2,100 and you have 10,000. Subtract all this from 79,000 and plus 2,700, that is 81,700. You will get as 25,650. 25,650 and 81,700. 25,650 will be divided in both the partners in the ratio of their capital, they say, in the proportion of the capitals, that is 6:4 or 3:2, and that will give you 15,390. It is to net profit A and S. It is 15,390, and next will be 10,260. 10,260. So this net profit will be transferred to the capital accounts. This is 81,700. This also will come 81,700. So this will be balanced. We have prepared the trading account, profit and loss account. Let's prepare the interest on capital and balance sheet of the problem. We will make the partners capital account of Amit and Shubham. Amit and Shubham. This is credit side and debit side respectively. Now first we will write the balances, that is the money they have contributed in the business. So by balance brought down, right? You cannot write capital account because that's the capital account. You cannot mention that name of the account which you are preparing. So how much capital they have put in the business? 60,000 Amit has put and 40,000 has been put by Shubham. So that is the initial capital. Next, what you have? Interest on capital also. All what is increasing the capital will come here, as I told you. So interest on capital also that we calculated in the profit and loss account will come here. Interest on capital, how much did we calculate? 6,000 and 4,000. That is 10% on 60 and 40,000. So this was 6,000 and 4,000. Right? Next, what will come? P&L account. By P&L account, that is profit that you earned. So P&L account, how much profit did you earn? 15,390 for Amit. 15,390 for Amit and 10,260 for Shubham. 10,260 for Shubham. What else they have? They have the drawings. Drawings also given to us. See, why we will write drawings on this side? Drawings means you have taken money of the business for the personal use. You have to return it back. So this will decrease your capital when you have to give something. So how much is the drawings? Drawings is 3,000 and 1,500. Right? So what else? Nothing else is given. Just find out the balances. To balance, carry it down, close it, add it and close it. Right? 60,000 plus 6,000 plus 15,390 is 78,390. 78,390 minus 3,000 will give you 75,390. 75,390. Next is 40,000 plus 4,000 plus 10,260 will give you 54,1060. Then rest you will minus how much? 50,000. So that will give you the balancing figure to be 52,760. Right? Close it. 54,260. 54,260. This will be 78,390. This will be 54,260. Right? So this is the capital account. Now you will have these balances to be carried in the balance sheet when you prepare. Don't use the balances that have been given in the question. Use these balances, the new capital balances. Let's prepare the balance sheet now. The balance sheet for the same question. Let's move on. First we will do the asset side. Asset side, what all will come? Drawings will not come. Opening stock, purchases, wages, factory and works manager. See the trial balance, or check all the items. Audit fees, discount, general expenses. Directly they have given land and building, plant machinery, goodwill, debtors, cash in hand, everything will come, and the closing stock also, and the insurance claim calculation that I told you. So first let's see the goodwill. How much is the goodwill for 15,000? Write the goodwill, 15,000, right? What next? You have land and building. That's land and building is given for how much? You have land and building that's being given for 90,000, and you have provided depreciation at the rate of 5% per annum. So land and building you have for 90,000, right? Then you have provided depreciation at the rate of 5%. So that will be 4,500. 90,000 minus 4,500 will give you 85,500. 85,500 is your final amount of land and building. Next is plant and machinery. See, plant and machinery, how much is given to you? Plant and machinery is given to you as 60,000 in the question, right? How much depreciation you are providing on plant and machinery? 10%. So subtract the depreciation of 10%, that is 6,000. So how much will come? 54,000 net amount. Next what you have? You have the sundry debtors. How much debtors given to you? 42,000. Sundry debtors is given to you as 42,000. Less, you have made the new reserve. See in the adjustment, 5% reserve for doubtful debts you have made. Remember, 2,100. So you subtract that. New reserve you have made for 5%. 2,100, that is 5% on 42,000, 2,100. So 42,000 minus 2,100 will give you 39,900. 39,900, right? What next? You have closing stock, insurance claim and cash in hand. How much is the closing stock given? 65,000. Closing stock is given as 65,000. Remember insurance claim calculation? Insurance claim, you had a total loss of 5,000 for which you got 3,500 as the claim. So 5,000 trading account credit side, insurance claim, whatever money you receive will come on the asset side, and last thing, that is whatever balance that you didn't receive will come in the P&L account debit side. So close insurance claim 3,500 received. Last is cash in hand 7,500. You have cash in hand 7,500, right? So this is 7,500. Come on to the liabilities side. This was the assets, and now we will deal with the liabilities. Liability, please mention the capital accounts. Capitals of Amit and Shubham, 75,390 and 52,760, right? 75,390 plus 52,760, right? Add it up. How much you get? 1,31,150. 1,31,150. Okay. So this is the capital accounts, that is liability side. Next you have the sundry creditors, right? How much is the creditors for? 55,000. Sundry creditors 55,000. Okay. What next? You have bank loan. You have bank loan and you also calculated interest, right? Remember 15% for 3 months on 60,000. So you will write bank loan as how much? 60,000, right? Plus interest. How much? You have interest as 15% for 3 months. Right, because the loan was taken on 1st January 2010. So January, February, March, 3 months loan, 2250. 2250. 62,250 will be the amount that will be shown on the liability side. Next you have the bills payable 17,000. Bills payable 17,000, right? What next you have? You have outstanding wages and outstanding salaries of 2,000 and 3,000 respectively. Outstanding wages and outstanding salaries, how much? 2,000 and 3,000. Either you write it here, add it up and write 5,000, or you write it this way. It could be any of the ways, right? It should tally. Both the sides should be equal, right? It should tally. So 15,000 plus 85,500 plus 54,000, 39,900 plus 65,000 plus 3,500 plus 7,500 will give you 2,70,400. 2,70,400. Similarly, 1,31,150 plus 55,000 plus 62,250 plus 17,000 plus 2,000 plus 3,000 will give you 2,70,400. 2,70,400. It's not 500, it's 400. 2,70,400. This is the balance sheet that you have prepared. So now you have the partner's capital account and balance sheet for the numerical. We will deal with the next numericals now. We start on with the 11th numerical of Partnership Final Accounts, Chapter 1. See what the 11th numerical says. You have all the adjustments and the trial balance given to you. Capital, purchases and sales. See the adjustments. You have the closing stock. Goods worth 6,000 taken over by Santosh for personal use were not being entered. So that will be coming definitely. That is a kind of a drawings. So you have drawings not only in the form of cash but also in the form of goods. Right? Audit fee was outstanding. Bad debts and RDD, that is reserve for doubtful debts. And you have depreciation over plant and machinery and land and building, right? Now you come on to the, so there's nothing outstanding types, there's nothing different which you have not done. It will be all the same numericals. Maybe some of the items that are given in the trial balance would differ from the others. So you will have an idea which item comes in which account. First we will make the trading and profit and loss account. It is in the books of Vaibhav, so in the books of Santosh and Vaibhav, trading and P&L account for the year ending this, that is 31st March 2010. Capital accounts, you won't take purchases and sales given to you and you have returns given with it, right? Purchases and sales. First you will mention the opening stock, that's in order. Opening stock is 30,000. To opening stock 30,000, right? What is next? Purchases. 2 purchases less returns, right? Next you have buy sales less returns, right? Now understand the concept of purchases, right? The purchases and the sales amount 2,70,000 and 5,60,000. This is 2,70,000. This is 2,70,000 and sales is 5,60,000. Alright. Then you have the returns. See what the returns are. Returns is 5,000 and 3,000. Now one is debit, one is credit. But you think if purchases is debit, the returns are also debit is not necessary, and that is wrong. Returns is also known as purchase return or return outwards, as I told you, and this return is known as sales return or return inwards. Return outward means you purchased an item, you didn't like it, that was not up to the mark, or you never wanted it, so you will send it back, means return outwards. Means you purchased, then you return. So that return outwards means something is going out. Goods are going out means goods are credited. So purchase return is always credited. So 3,000 credit will come here. Alright. Next is return inwards or sales return. Means you have sold the goods and those goods are coming back to you. Might be of any reason. They were not wanted. They were not up to the mark or they were not liked. So that is known as sales return or return inwards. Means goods are coming back to you. If something is coming back to you, that will add up your assets. So that is goods return or sales return or return inwards, and that is debited. So whatever you see your third item returns, 5,000 is debited means that is returns. So that will be subtracted because it is a debit item, you are writing on the credit side, so you subtract it. If it is a debit item, you are writing on debit side, means debit side is increasing. And if it is a credit item, you are writing on the debit side. See, returns is a credit item, 3,000 is written on the credit side, but you are writing it on the debit side. Means what? This is debit, this is credit, means that is why you subtract it. And this is a debit item. That is 5,000 is a debit balance, you are writing on the credit side of the account. So you are subtracting it. So 2,70,000 minus 30,000 will give you 2,67,000, right? 5,60,000 minus 5,000 will give you 5,55,000, right? Then what is the next thing you have? You have the import duty. Import duty, then you have the Manufacturing expenses, first of all, manufacturing expenses 21,500. To manufacturing expenses 21,500. 21,500 is the manufacturing expenses. Next is what? Import duty. Import duty will also come in the trading account, because import means you are importing machinery or raw materials that is directly connected to your production activity. So even that will form the part of your trading account. So to import duty, how much is the import duty given to you? 4,500. Okay, 4,500 is the import duty that is given to you. What is next? Plant and machinery won't come. Land and building, furniture, fixtures, freight. Freight is given to you. If it is freight inward, it will come here. Freight outward will come in P&L. If nothing is mentioned, if it's just written freight, it will be treated as freight inward and it will be written in trading account. So freight means freight is given 7,000. Right? See next, debtors, discount, bills, batters, reserve, administrative expenses, wages and salaries. If it is salaries and wages, you take it in P&L, but it is wages and salaries means wages has a upper hand, so you will take in this account, trading account. So to wages and salaries, how much are the wages and salaries given to you? 10,000. So you will take in the trading account, wages and salaries 10,000. That's all. Anything else? Cash in hand, cash at bank, selling and distribution expenses, nothing will come. Okay. Now you please, closing stock is there. Closing stock you will mention. And one more thing, goods worth 6,000 were taken over by Santosh. So goods have become less. So you will write here, by Santosh's drawing of goods. See, goods have decreased. From the business he has taken the goods, so definitely they will come on the credit side. How much goods has he taken? 6,000. He has taken a drawing of 6,000 in the form of goods. Closing stock is given as 38,000. You have the closing stock 38,000, right? Here you balance it. 5,55,000 plus 6,000 plus 38,000 will give you 5,99,000. 5,99,000. Here you have 30,000, 2,67,000. Then 21,500, 4,500, 7,000 and 10,000. You will have gross profit. To gross profit carried down, how much? You will add up all this and subtract from the total of this. Whatever balance you have, that will be the gross profit. That is 2,59,000. 2,59,000. This is the gross profit. Balance it 5,99,000. Right? Now you take this gross profit. This is, you have closed the trading account, done up the trading account. Gross profit is, you have calculated by gross profit carried down. 2,59,000. 2,59,000. Alright. Next you have profit and loss account. Let's prepare the profit and loss account. See how many things are there. First of all, you have the administrative expenses. Before that you have the other things, that is reserve and all. First take something that has no adjustment. You have sundry debtors and creditors, then you have administrative expenses, any other thing which has been left out. Manufacturing expenses, you have taken import duty, you have taken debtors, then you have, it's just administrative expenses and selling and distribution expenses, and you have the discount, right? First you take to administrative expenses. How much is the administrative expenses given to you? 25,000. Alright. Next is selling and distribution expenses 30,000. No adjustment. Selling and distribution expenses 30,000. Right. What next is given to you? Discount. See, discount, debit and credit both they have given. So debit, write it on the debit side. Credit, write it on the credit side. Debit balance is how much? Debit discount or given on the debit side is known as discount allowed. Means somebody had to give, see, discount allowed is how much? 3,500. See, why it is said discount allowed? Somebody must, you were taking, some debtors were there, or somebody, Mr. A is giving me 10,000 rupees. I said, okay, I allow you a discount of 3,500. It's given in the debit, so 3,500 means that 3,500 is a loss. He will not give 3,500, 10,000 minus 3,500 he will give. So that 3,500 is supposed to be a loss for me, because that money will be deducted from the amount that the person had to give. Now he will not give that amount. So 3,500 is a loss, that is a discount allowed. So it will be written on the credit side, the debit side, and it is known as discount allowed. Discount received also you write it on that side. So what is the discount received you have? 4,500. So you write here by discount received how much? 4,500. You have the discount allowed 3,500. Next you will have reserve for doubtful debts. So you will make up what? A reserve for bad and doubtful debts account. To reserve for bad and doubtful debts account, that is RVDD account. Now see what they have given. Have they given the bad debts in the question? Yes, the bad debts have been given as 2,000. Bad debts have been given as 2,000. Have they asked to prepare the new bad debts? Yes. Write off bad debts rupees 2,000 more. So you will add up new bad debts 2,000 more. So that adds up to 4,000. Anything else that is need to be done? They say in the question that you have to provide reserve for doubtful debts at 5% on debtors. The debtors given to you in the question are 1,10,000, and you have to subtract this 2,000 from there, so that will become 99,000. After that you will, anything else given, reserve, old reserve is already given to you. Old reserve is given to you in the question. You don't have to calculate that. Whatever debtors are given to you in the question, write the amount of debtors minus the new bad debts. After subtracting the new bad debts, you will create a reserve of whatever percent. Here 5% is given to you. So after that is the format. So you have the debtor, subtract the new bad debts, and then create the reserve. So your new reserve will be subtracted. So new reserve on that will be 5,400. New reserve is 5,400. You have the old reserve also given to you, that is 2,000 plus 2,000, 4,000, and you have 4,000 minus 5,400. See, that will be, new reserve will be added. I'm sorry. This is 2,000 plus new bad debts 2,000 plus new reserve 5,400. This will give you 9,400. Right? Now you have the old reserve given to you in the question before itself that you will subtract. All the items new, bad debts plus new, both the new bad debts and new reserve will be added. Old reserve is given to you as 11,000. Now see, you have 9,400 and 11,000. This will give the answer in minus. You will not write anything in minus here. Instead what you do is, that is you have 9,400 and 11,000. That is a difference of 1,600. That you will write it on this side. So this point was not given in any question. So in this question you have given, please see, 9,400 minus 11,000 will give you minus 1,600. We don't write anything in minus on any of the sides. So if there is a minus item, you will write it on that side. Means it is a that side, the credit side item. So you will have by reserve, on reserve for bad and doubtful debts account, how much? 1,600. And here you will not write anything, put a dash. Right? What next will come here? You have the audit fees given to you as adjustment. They have given audit fees for the year was outstanding 8,000. So you have to audit fees 8,000. Right? What next they have asked? They have asked to provide the depreciation on plant and machinery and land and building at the rate of 10%. Plant and machinery and land and building is given to you as 2 lakh and 1,50,000 respectively. So you have to take the depreciation. It will be 15,000 and 20,000. So to depreciation on land and building and plant and machinery both. You have 15,000 and 20,000. 15,000 plus 20,000. So that will be how much? 35,000. So that is the depreciation amount that you have calculated. Anything else that needs to be mentioned? Discount you have written, gross profit has come. Then you have the interest on the securities. See, they say 10% government securities purchased on 1st January 2010. So for January, February, March, 3 months you have to calculate the interest. By interest on government securities. Interest you have to calculate for 3 months, that is 1 lakh. How much they say? 10% means you have to calculate 1 lakh at the rate of 10% for how many months? For 3 months. Right? 1 lakh into 10% is how much? 10,000. For 3 months you have to, that is for 12 months. For 3 months it will be how much? 2,500. So this 2,500 will appear here on this side, right? What next? Anything else needs to be mentioned? No. After doing this, you calculate the total of that column, that is 2,59,000 plus 4,500 plus 1,600 plus 2,500, that will give you 2,67,600. That will give you 2,67,600. Alright, then you calculate this here also. 25, you have till here you have 25,000 plus 30,000 plus 3,500 plus 8,000 plus 35,000, and whatever you get you subtract from 2,67,600, you will get a balance, that is a net profit of 1,66,100. To partners capital account that will be transferred. Who are the two partners? Santosh and Vaibhav. Santosh and Vaibhav are the two partners. How much is the profit they have earned? 1,66,100. 1,66,100, and you have 2,67,600 as the total. Now this 1,66,100, nothing is being given. They say they have to have no ratio has been given to you, not in the capital also. So this will be divided equally between the two partners, that is 1,66,100 divided by 2. So you will get equally 83,050. 83,050 for Santosh and 83,050 for Vaibhav. So this will be transferred to the capital accounts. But one thing that was not in the other questions but it was in this question was the calculation of this bad debts given to you plus new bad debts plus new reserve minus the old reserve. So you will get something in minus. So minus item won't be included, it will be mentioned on this side then. Rest is the same. Partners capital account we will prepare. In the question they have given the partners capital account, that is they have given 2 lakh each contribution by both Santosh and Vaibhav. So get the capital accounts. Capital is a credit item, so you will write the balances on the credit side. Whatever is adding to the capital will be written on the credit side. Whatever is deducting or lessening their capital, that will be written on the debit side. By balance brought down, you have 2 lakh for Santosh and 2 lakhs for Vaibhav, right? What next? P&L account. Profit is increasing the capitals, so you will write it on this side. By P&L account, that is you have share in profits, right? How much profit did they earn? 83,050. 83,050 each. Right? They were also given the drawings in the question, that is Santosh drew goods, right? So drawings of Santosh will be mentioned. 2 drawings. In which form? Goods. How much did he withdraw? 6,000. And he didn't do anything. Only Santosh withdrew the goods, so drawings will come on this side. Anything else? No. So you have 2 balance carried down, right? Close the accounts. Calculate the figures. 2 lakh plus 83,050 will give you 2,83,050. 2,83,050 and 2,83,050. Come to this side, 2,83,050 minus 6,000 will give you 2,77,050. 2,77,050 and 2,83,000, there is no amount, so it will be 2,83,050. Now you have the 2,77,050 as the new capital for Santosh and 2,83,050 as the new capital for Vaibhav. So when you prepare the balance sheet, you will not mention the capital accounts, that is the figure of capitals given to you in the question, but you will take these two capitals. Let's prepare the balance sheet. We will now prepare the balance sheet. See what is given in the balance sheet. You will have the land and building. First you will have the plant and machinery and land and building given to you. So land and building is 2 lakh. Land and building is given to you 2 lakh. Right? Minus the depreciation. Depreciation 10% is given to you as, so you will calculate 20,000. This will give you 1,80,000. Right? So land and building is done. Next is plant and machinery. 1,50,000 is given to you, and depreciation again 10%. Plant and machinery 1,50,000 minus depreciation at the rate of 10% for 12 months. If nothing is given, it's 12 months taken. 15,000. Balance will be 1,35,000. Right? What next is given to you is you have furniture and fixtures of 50,000 but no depreciation or any other adjustment. So you directly write furniture and fixtures of 50,000. Right? What next? 10% government securities is given to you. See, we calculated the interest, remember? So that is interest due but not yet received. First write the securities, that is 10% government securities. How much that was? For 1 lakh. And we have calculated the 3 months interest on it for 10%. So how much did you get the interest? 2,500. So that is interest due but not yet received. So that is an asset. So plus interest due not received. How much? 2,500. So that will be 1,02,500. 1,02,500. Right? See what next is given to you. You have sundry debtors of 1,10,000. Sundry debtors is given to you as 1,10,000. Right? Then you have to subtract what? New bad debts, that is 2,000 minus new bad debts. That is the format. Subtract the new bad debts first. 2,000. So how much you will get? 1,08,000. 1,08,000. Now you create the new reserve on 1,08,000. For what is the percentage given to you? Percentage is 5%. So 5% on 1,08,000 will give you 5,400. Okay? 5,400. 1,08,000. 1,08,000 minus 5,400 will give you 1,02,600. 1,02,600. Alright? Anything else given to you? You have closing stock, cash at bank and cash in hand. Closing stock is given to you. Right? Closing stock is given how much? 38,000. Then you have the cash in hand and you have the cash at bank. So cash in hand is how much? Cash in hand is 2,500 and bank is 22,500. So cash at bank is 22,500 and cash in hand is 2,500. Now you come on to the credit side, liabilities side. Liabilities, first you write the closing capitals of Santosh and Vaibhav, right? 2,77,050. You have 2,83,050. Alright, so you have the capital for both the people, that is both the partners. Next you take the sundry creditors. Sundry creditors are given how much? 65,000. Right? What is the last thing given to you as outstanding audit fee? 8,000. Outstanding audit fee is given to you as 8,000. That's an adjustment, right? Total of the two columns. Closing stock, cash in hand is 2,500, cash at bank is 22,500, total is 6,33,100. 6,33,100. Here also you will have the same total. Tally the balance sheet. 6,33,100. So 2,77,050 plus 2,83,050 plus 65,000 plus 8,000 will give you 6,33,100. Both the columns, both the sides, that is liabilities and assets, are tallied. Hence you have the balance sheet done up for the 11th question. Let's move on to the next question, please. We will now do the last numerical, that is numerical number 15th. Question number 15 of your textbooks. Let's see what they have given. They have given the opening stock 38,000. So to opening stock 38,000. Next, what they have given purchases, they have given, see, in the adjustment they have given that you have 6,000 was destroyed, interest on capital, closing stock, insurance is given, outstanding expenses are given. They also say that there is purchases which has not been yet recorded. We start off with question number 15. See what it says. It has opening stock of 90,000 given to you. To opening stock 90,000, right? What else is given to you? They say you have bills receivable and bills payable, closing stock given to you, interest on capitals, machinery and all that stuff. So you have purchases and sales, and you have the returns also. How much is the purchases for? 2,10,000. So you have two purchases. How much? 2,10,000. And here you have by sales. How much sales is given to you? You have 3,27,000 as the sales given to you. 3,27,000 less returns. So whatever given on the debit side will come here. Whatever given on the credit side will be subtracted from purchases. So returns you have how much? 2,000 and 4,000. So 4,000 will be subtracted here and 2,000 will be subtracted from sales. So this will be how much? 2,06,000. 2,10,000 minus 4,000 will give you 2,06,000, and this will give you 3,25,000. Alright, so sales is clear. You have next is closing stock. See, closing stock is given cost and market price. You take it on cost, that is 30,000. By closing stock, how much? 30,000. Alright. What next is given to you? Next you have opening stock you have done, purchases you have done, returns you have done. What else given to you? See the adjustment. Closing stock you have taken, interest on capital and interest on drawings will not be included in the trading account. Goods worth 6,000 were destroyed by fire. So by goods destroyed by fire, how much? 6,000. How much claim you are receiving? 4,800. So 6,000 minus 4,800, how much loss is there? 1,200. So that will be included in the P&L account. 6,000 in the trading account, 4,800 on the asset side balance sheet, and the balance, that is 1,200, will be included, will be written or recorded in the P&L account. Depreciation you will not take, insurance you will not take, outstanding salary. Wages is given how much? Wages is 12,500. Right? Then you have add outstanding. How much outstanding is given to you? 4,500. 4,500. This will give you 17,000. Alright. Now next what you have? Royalties. Royalties given to you in the question is 4,000. Write the royalties 4,000. To royalties how much? 4,000. Alright, so royalties is done 4,000. Anything else that is to be included? Outstanding expenses you have done, insurance, that will come down. Alright, now you have to find out 3,25,000. Add it up here, close it. Add it up here, close it. you will get gross profit or a gross loss, right? You have 3,25,000 plus 30,000 will give you how much? 3,55,000 plus 6,000 will give you how much? 3 lakh. This is 3 lakh. 4,21,000. 3,25,000 plus 30,000 will give you 3,55,000. 3,55,000 will plus you have 6,000. Three lakh 25,000 plus 30,000 will give you 3,55,000 plus 6,000 will give you 3,61,000. Alright, you come on to the debit side. 2,06,000 and 17 will give you 2,23,000 plus 4,000 that, and you have 2,63,000, minus it with 3,61,000, that will give you 44,000. So gross profit is 44,000. Alright. Next you come to the P&L account, right? By gross profit brought down, right? How much? 44,000. What else will be included? You have what you have closing stock, interest on capitals and interest on drawings given to you. So you will have interest on capitals and interest on drawings. That is something that you are paying. Interest on drawings is like a business income, right? So you will have interest on drawings here and interest on capital. By interest on drawings, see how much interest they have given. Interest on drawings have been for Mohan were 200 and Rohan 150. Mohan is 200 and Rohan is 150. So total will be how much? 350. Alright. Any other thing that is missing? Goods destroyed by fire. Insurance company admitted a claim of 4,200. So you have 6,000 and you have 4,200. So it will be how much? 1,200. Just mention here. To loss by fire. How much? 1,200. Right? Anything else? You have depreciation. Write the depreciation for machinery and furniture. To depreciation, machinery and furniture. See how much that's been given to you? 7.5% on machinery. Find the value of the machinery given in the question. Machinery is given to you as 80,000. Right? 80,000 machinery, you have to calculate 7.5%. And for furniture, see what is the amount given for furniture? Furniture is 30,000. So you have to calculate 4% on furniture. So you have the depreciation as 6,000 and 1,200. 6,000 and 1,200. So you will have this as 7,200 and loss by fire is 1,200. Loss by fire is 1,200. Anything else that's been given to you? You have outstanding salaries. See the amount of salaries given in the question. Salaries and wages. Salaries and wages is 10,500. 10,500 plus 2,500. You have two salary and wages. How much? 10,500 plus outstanding. See what is the amount of outstanding? 2,500. So this will be how much? 13,000. Alright. Next you have, next see what is the item? Bills issued, bills payable, won't come, returns, salaries and wages. You have taken carriage outward. What is carriage outward? 1,800. To carriage outward, how much? 1,800. Alright. Next wages, insurance. Have they given anything for insurance? Yes. Insurance is 2,400. Alright. Insurance is 2,400. And they say that they have paid insurance up to 30th September 2009. It has to be paid till 31st March. They have paid it for 30th September also. April, May, June, July, August, September. for 6 months they have paid extra, right? For 6 months, that is for how many months they have paid? For 18 months they have paid 2400. For 12 months it would be 2400 divided by 18 into 12, right? So 2400 into 12 by 18. What it will be? You have 2400 divided by 18 multiplied by 12. So that is 1600. 1600. So how much extra you have paid? It should be 1600. How much extra you have paid here? 800. So you have prepaid insurance as 800. Right? What next is given to you? Rent and taxes. Any adjustment given in the rent and taxes? No, you have taken insurance. Rent and taxes is 1500. To rent and taxes 1500. Right? What next is given to you? Discount. Discount 800 and 700. Anything given else? No. So to discount you have 800 and to discount you have how much? 700. Anything else? You have royalties you have taken, cash in hand will not come. What? Interest on capitals we have to take. Interest on capitals is 8% on both the capitals. So to interest on capital, who are the two partners? You have Mohan and Rohan, M and R, right? So 8% on the capitals. What are the capitals? 90,000 and 70,000. So you have 90,000 into 8%. 90,000 into 8% will give you 7,200, and you have next is 70,000. 70,000 into 8% will give you 5,600. So you have 7,200 and 5,600. Now you have insurance done with you. Next is you are paying the rents and taxes. Is there any adjustment for that? No, you don't have any adjustment for the same. So you just have to write 800 for rent and taxes. Then you have the discount you have written already. Then you have the interest on capitals that has been given to you. Discount 800 has been mentioned. Interest on capital 7,200 and 5,600 we have calculated. Then you add up 44,000 plus 350 plus 700, that will give you 45,050. Add up this side also, right? Whatever balance you are getting as 4,550, right? So 4,550 will be divided in which ratio? 3:2 given in the question. That will be 2,730 for Mohan and 1,820 for Rohan. So this is how you will prepare your trading account and P&L account, right?